Good morning, good afternoon, good evening, wherever you may be in the world. My name is Hugh Morris. I'm a senior research partner with Yen Group, and it's my absolute pleasure to introduce one of our periodic FS Club events, hosted by our very good friends in Mauritius, looking at the extremely current and important topic of ESG investing, with a particular focus on Mauritius. And it is now my great pleasure to hand over to Mr. Warren Vardin, Acting Senior Manager of the Financial Services Commission, formally to welcome you.
Thank you for these introductory remarks, Hugh. A very good morning, good afternoon, wherever you are. A very well welcome to everyone joining us today for this webinar, theme ESG investing in Mauritius, unlocking green finance and sustainable returns. It is a real pleasure to open this session, and I'd like to thank you all, regulators, industry professionals, investors, development partners, and thought leaders for taking the time to be part of this timely and forward-looking discussion. As we gather here today, one thing is clear. ESG investing is no longer a trend. It's a transformating force reshaping global capital markets. Globally, ESG-related assets surpassed $30 trillion in 2022, and they are expected to exceed $50 trillion by 2025, representing more than one-third of total assets under management. This reflects a growing recognition that sustainability and financial performance are inextricably linked. As a well-regulated international financial center with strong legal and institutional foundations, Mauritius is well positioned to become a regional hub for green and sustainable finance. The introduction of the Green Bonds guidelines by the Financial Services Commission and Mauritius' commitment to the UN Sustainable Development Goals and the Paris Agreement lay a strong foundation for sustainable finance to flourish. The recently published disclosure and reporting guidelines for ESG funds further provide the necessary guidance for collective investment schemes and closed-end funds which use or include ESG factors as their key investment focus and strategy. According to recent data, Africa accounts for less than 1% of the global green bond market, yet it faces some of the greatest climate vulnerabilities. This presents both a challenge and a compelling opportunity for Mauritius to lead by example and catalyze sustainable capital flows into the region. Today's webinar is about just doing that, unlocking innovation, unlocking capital, and unlocking collaborative solutions to advance ESG investing in our jurisdiction. We'll hear from experts on the key building blocks of a robust ESG ecosystem, from disclosure and reporting standards to product innovation to risk management and regulatory support. We'll explore how ESG principles can be embedded not just in investment products, but in the governance and culture of financial institutions. And more importantly, we'll consider how ESG investing can deliver real-world impact, protecting our natural environment, uplifting communities, and supporting inclusive economic growth. This conversation is also a call to action. As we face the challenges of climate change, social inequality, and shifting investor expectations, the role of the financial sector is critical. According to the independent high-level expert group on climate finance, closing the climate financing gap in developing countries will require over $1 trillion annually by 2030. The private sector, especially through ESG-aligned investing, are an integral part of the solution. So let us ask ourselves, how can we direct capital not only for profit, but for purpose? How do we ensure our financial systems are resilient, responsible, and ready for the future? With that, dear friends, I invite you to engage openly, ask questions, and share your perspectives throughout today's session. Together, let's shape the future of sustainable finance in Mauritius. Thank you once again for being here, and I wish you a very productive and inspiring discussions ahead. Thank you.
Thank you very much, Mr. Vardin, for those exceptionally insightful welcoming remarks. It is now my great pleasure to hand over to Mr. Vishwadeo Sibalak, Senior Manager at the FSC. Mr. Sibalak, all yours.
Thank you, Hugh. Good morning and good afternoon, everyone, definitely depending from where you have joined us today. So from my side, I would like, first of all, it's important that we understand our perspective here. So my intervention today is with regards to FSC's mandate on the ESG landscape. Next slide, please. What I'll do, Hugh, and the audience, so I'm going to continue with the presentation. So first of all, I would like to highlight that the FSC is the regulator for the non-banking financial services sector, and there are 5 key segments under our purview: the trust and corporate service providers, global business, capital markets, investment funds, insurance and pensions, and fintech. And one of the core functions of the FSC is to license, regulate, monitor, supervise the conduct of business activities in the financial service sector, and also to take measures for the better protection of consumers of financial services. So with this mandate, it is also important to look at what commitment the government has taken at national level on the ESG journey. So in 2015, Mauritius became a signatory to the Paris Agreement through the COP21. In 2016, Mauritius committed to the UN SDGs. In 2020, a Climate Change Act came into force in Mauritius. 2024, the Environment Act came into force, and in 2024 itself, Mauritius reaffirmed its commitment to the UN SDGs by committing to a cooperation framework. Other than the commitment taken by the government at national level, it is important to also look at what commitment the FSC has taken through different initiatives. So the FSC, we are a member on the Task Force on Regulation and Supervision by the Bank of Mauritius. We're also signatory to the Marrakesh Pledge. We're also member on different working groups, either through the IUSCO, AMERC, as well as the SADC. And lastly, we're also a member on the Network for Greening the Financial System. So with these, I would say, functions, core functions, and commitments taken by government, by the Commission, so there is definitely a mandate for the FSC to regulate and supervise the ESG investment. So this is where in December 2021, the FSC issued the guidelines for green bonds. This was updated in April 2022. And in March this year, the Commission came out with the guidelines for ESG funds. With respect to the guidelines for green bonds, so far we have 2 issuers. So the first issuer came in 2021 with a project of 65 million USD over a 5-year period. And so far 2 closings have been made, amounting to 42.5 million USD. For the second issuer, the latter came in 2022 for an issue of 14.5 million USD. What I also want to share with you is that we've conducted a survey in 2022 and 2023 as a precursor to the guidelines for ESG funds. And what we have found, so the survey was targeted for the investment funds, that is the collective investment schemes and closed-end funds in Mauritius. The population targeted was 925. We received a very good response rate of 860 licensees, amounting to 93% of respondents we received. And out of these 860, we've observed that 202 entities confirm that they are conducting ESG investment, so representing nearly 25% of the respondents. And the profile of those investors are the development finance institutions, state-owned enterprises, foundations, pension funds, sovereign wealth funds, fund of funds, family offices, high net worth individuals. Interesting to know that out of this survey, so as per the responses received, the UN SDGs which have been prioritized by the funds are Goal 5, gender equality, Goal 8, decent work and economic growth, Goal 14, better life below water, Goal 15, life on land, and Goal 16, peace, justice, and strong institutions. And the frequency of disclosure by those funds are on a quarterly basis, half-yearly, as well as annually. And the main standards being followed by those funds are the standards published by FC Performance Standards, the Global Reporting Initiatives, the UN PRI, as well as the Task Force for Climate-Related Disclosures. We have also received some responses whereby entities have been reporting as per their group ESG guiding principles. So with these results from the survey, I have come to an end of my presentation, and I thank you for your kind attention. The floor is yours, Hugh.
Thank you very much, Mr. Sibaluk. Now my great pleasure to introduce Mr. Nitan Yand Kaulasir, who's head of the Climate Change Centre at the Bank of Mauritius. Mr. Kaulasir, over to you.
Okay, so I was on this slide, nationally determined contribution. I said that Mauritius has taken a commitment to reduce its carbon emissions by 40% by 2030. And to achieve that, it needs to attain certain targets. It is listed in the slide. You can see the most important one being to achieve 60% of green energy in our energy mix. But the key point is that we need to finance these targets. We need investments amounting to $6.5 billion by 2030. And we have been able to mobilize only a fraction of that amount. So that's why sustainable finance is a very key issue for the authorities, and we are trying to work together with all the authorities to scale up climate finance in Mauritius. Now, the Bank of Mauritius, we are the central bank of the country. We recognize that climate change can pose risks to the economic growth, to social development, and it can also pose risks to price stability and financial stability, which are our statutory objectives. Now, in order to address those risks, the Bank of Mauritius has set up the Climate Change Centre in October 2021. In my previous slide, you will see the slide on objectives of the Climate Change Centre. Previous slide, please. Can you move the previous slide, please? Yeah. So these are the objectives of the Climate Change Centre. The main one you will see is to integrate climate risk into the bank's regulatory, supervisory, and monetary policy frameworks. And another objective is to support the development of sustainable finance. And I'm going to speak on this issue this afternoon. Next slide, please. Yes. So a central bank can foster the development of sustainable finance by three ways. The first one is to ensure that climate change does not pose risk to stability of the banking system. And in order to do this, the Bank of Mauritius has issued a guideline on climate risk in April 2022. The objective is to assist financial institutions to better assess and manage climate risk in their lending and investment activities. Now, it is also important to note that this guideline promotes transparency by requiring financial institutions to disclose in their annual reports the integration of climate risk in their governance, strategy, and risk management frameworks. The guideline, as of today, is fully operational, and the first set of climate disclosures has already been published in the annual reports of financial institutions. Now, 3 years down the road with the issue of the guideline, we have seen that the guidelines has contributed to raise awareness about climate risk and opportunities among financial institutions and the corporate sector. Next slide, please. So the second way the central bank can contribute to climate finance is by establishing appropriate frameworks. And the bank has issued its guide for the issue of sustainable bonds in June 2021. The FSC also has issued its own guide, and the Minister of Finance has come up with a sustainable finance framework for Mauritius. It was issued in August 2023. This governs the issue of specific types of sustainable debt instruments by government to finance its environmental and social objectives. Now, it is important to note that both the guide and the sustainable framework, they are aligned with global benchmark issued by ICMA and the Climate Bonds Initiative. And our surveys do suggest that there is a gradual transition towards a greener banking system. The banking sector's total exposure to sustainable projects has increased substantially from 4.2 billion as at end June 2022 to 10.2 billion as at end June 2024. Now, so far, as my friend from FSC has mentioned, there has been a couple of bond issuance, but we feel that there is need to have more such issuance. There is need really to deepen the green bond market in Mauritius. Next slide, please. So the third way to promote climate finance is to strengthen the climate ecosystem in terms of climate data, green taxonomy, and disclosures. And on this aspect also, the country has made some good progress, I would say. That work is underway for the development of the national green taxonomy. And very soon, in a few months, we are going to have this framework for Mauritius. Now, we also know that across the world, there's an increasing number of jurisdictions that have adopted or are in the process of adopting IFRS S1 and IFRS S2. And again, that authorities in Mauritius, we are working on a roadmap for the eventual adoption of these standards in Mauritius. Next slide, please. So I will just end my intervention with a few words about the future of banking in Mauritius report. This is a joint initiative between Bank of Mauritius and the banking industry. It was launched in September 2022, and the aim is to support the sustained expansion of the banking sector, reinforcing the position of the Mauritius international financial sector as a center of choice, excellence, and repute in the region. The Bank of Mauritius, together with our banking community, we are currently implementing the recommendations of the Future Banking Report. And one key strategic objective is to develop a banking sector ESG strategy aimed at supporting the greening of the domestic financial system and position Mauritius as a leader of ESG in Africa by embedding ESG standards in the domestic market. Thank you for your attention.
Thank you very much indeed, Mr. Cowlisser. It's my pleasure next to introduce Ms. Aisha Zakraoui, who has got up incredibly early in New York to be with us today. So thank you very much indeed for that, and my pleasure to hand over. You're on mute, Aisha.
Sorry. Hi, everyone. It's a real pleasure to be with you all today. Thank you again to the Financial Services Commission for this invitation. So maybe a few words on Africa Invest. We are a bulky region investment platform. We've been around for 30 years now, invested in over 200 companies, and we have created and supported over 634,000 jobs. At Africa Invest, we do aim to create risk-adjusted return with meaningful and measurable impact. Maybe on the next slide here. So here you can see the breadth and depth of our investment strategy. We have over 22 funds spanning different themes. So we have funds that are specialized in healthcare or in financial inclusion. We target companies from early stage to large cap. We invest through different assets, be it private equity, private debt, blended finance. But the common denominator of all of this is the integration of impact and sustainability at every stage of the investment process. Of course, with some funds, we would go further, I would say, in terms of impact by having our own remuneration linked to impact KPIs. So this is the case, for example, for our blended finance vehicle, where we are targeting quality healthcare for underserved population in Sub-Saharan Africa. But really, all of this strategy do have impact and sustainability. And why is that? Because we do believe this is also what helps us to generate sustainable return. So, and maybe a few words on when I mention impact sustainability, because I mean, hearing the previous presentation. So at Africa Invest, how we define impact sustainability, we have the impact part, we have the ESG part, and we have the climate part. And why is that? We believe the definition is quite important. So when it comes to impact, it's really related to the value add. Here earlier, there was mention of the SDG. So the SDG would really be how we look through the prism and the lens of impact. On the ESG side, here we are more on the risk mitigation. It's a little bit to be less bad, I would say. So here, meeting local regulation, IFC performance standard, etc. So two sides of the same coin. Why for climate? And here, very interesting presentation heard earlier. It's really on the impact of climate on our bottom line. So we use what we call a double materiality, where we look at the impact of our company on the external world, including the environment with pollution. But we also do look at the impact of climate on our bottom line through the transition risk and physical risk of climate. So yeah, this is maybe to explain the definition terminology, because I know for this field we tend to see so many acronyms, etc. I call it an alphabet soup of acronyms, but I think it's very important that to operate under the same definition as standards. So maybe on the next slide, here, this is, I mean, we are very blessed to have a diverse pool of investors spanning different continents, from DFI, family office to bank, etc., from different countries. I mean, Mauritius for us was key for this journey to attract, of course, all of these investors. Mauritius is for us a place that ensured transparency, and I think the discussion we have today is a testament of the dialogue we've been having. So we discussed a lot on this disclosure with some of our counterparts, and we really believe that Mauritius could be a hub for the ESG and impact disclosure to really streamline this field in Africa. Maybe on the next slide. So yeah, so talking about here it's a little bit we wanted to capture, I mean, some of the impact that were created by Africa Invest in 2024. So that's we are a commercial investor, we do generate risk-adjusted return, but for us it does not come at the expense on impact. On the contrary, both are really enabling each other. And here you can see some of the impact that was generated in 2024. Across, we have 4 pillars at Africa Invest. The first one is around inclusive economic growth. So here you can see how many jobs were created and supported, so 634,000. But also we do look at the quality of this job. So we look, for example, at how much training was spent, what is the wages earned, the benefit, etc. All of this is being tracked, monitoring, etc. Using, of course, recognized methodology and indicators to standardize. For the second pillar, which is environment and sustainability, so here we can see we do measure the carbon footprint of our entire portfolio, which currently constitute 125 companies. We do, and this is very important, we do train our company on how to measure the carbon footprint, on how to set targets. And we have a very, I would say, hands-on approach, collaborative approach. We meet them where they are with tools that can calculate the greenhouse gas emission, whatever the journey they are in, and progressively we improve on the data quality, on the data collection, on the sophistication of the target, etc. So you can see here we have 37% of company with action plan, quantified action plan. We are currently putting in place our science-based target. So hopefully we'll be the first GP in Africa and the 8th in the world with verified science-based target. And yeah, and the journey is still far from done. On the third pillar, it's equality inclusion. So here we look at reducing inequality both among countries, but also within country through the gender lens, the social inequality, etc. And then last but not least is the quality institution and services. So when we invest into a company, we do aim to improve the quality of the product and the services, the affordability, and the accessibility. And here you can see some of the impact that was generated. And here you can see in the last slide, one of the impact is $14 billion in estimated risk-adjusted impact achieved through improved healthcare. And why I'm flagging that? Because this is a very topic of the next slide, where we wanted to present you, and here we do welcome all these efforts that have been and that are being done on standardization, mainstreaming. We do believe this is how we can scale with integrity impact. And that's why with through Africa Invest, with some experts, so US nonprofit, Britspan, with our DFI, with academics, etc., we have developed this methodology of impact, which is rigorous and evidence-based to measure impact, both the positive and the negative, and the environmental and social, because you would agree right now what happened in the impact sphere is we have hundreds of metrics of units. It's very difficult. While when we look at the financial side of it, everyone looks through the IRR. It can have many sometimes drawback. We know the IRR is not everything, but at least we have a MOC, we have the IRR. It's tangible. We can compare our performance with us last year, with us next year's, across investment, across benchmark. So we did believe that we needed to do the same for impact. We are not reinventing the wheel. This is very important. This is a methodology that had been used for 2 decades now by many parties. What we have done is first to apply it more to our African context. So for example, how to monetize quality job, how to monetize climate adaptation, which is something that is where Africa is particularly impacted, and also look at it, be able to do it for both equity and debt and the different asset instruments. And I think maybe most importantly is it's open source, because we do believe there is no room for proprietary methodology when we are facing the challenge that we are all facing now. So this is accessible to everyone. We can download it online. We are providing training, and the idea is really to be able to scale with integrity. So maybe the next slide, and here I won't go into the detail, but happy to share with you more. But really, I mean, this is a key advantage I have been saying. So bringing this rigor, and we do believe this would also galvanize more investors, because investors in Africa, what tend to happen is we think the risk is overvalued, but impact is undervalued. And we do believe, that's what we see when we run the MOI, that by really showing that we have this 3-dimensional paradigm when we have risk, return, and impact, and the tremendous impact that can be generated and is generated in Africa, that will galvanize way much more investment that is much needed, as was mentioned earlier on the financing gap. This is maybe on the next slide is the methodology we go about, and here I won't get to the detail, but really happy to share with you. I would only insist on one thing, this is very important, is here we do discount the impact based on the probability and the likelihood of the impact. And we do believe this is what makes also this methodology rigorous, because I mean, we're just not investing into companies saying, I'm gonna create jobs, they're gonna be good jobs. No, we really look at how good are these jobs and discounting it, and it's all very transparent using assumption. It is an assumption-based exercise, but as we say, so is a DCF, right? But the idea is to be transparent about this assumption. Last year slide. Here is why, the MOI, which really captures all that have been said. So the climate, the IFC performance standard, the TCFD, everything that was said earlier, this is all feeding into the MOI. Again, it's not to reinvent the wheel. It's just to feed in all this data that we're doing, all this framework into one single figures. This is what we think. And we do believe that almost more important than the number that gets spit out is the process that it will make us to do it. And really this mainstreaming that is much needed, and standardization when it comes to impact. So this is here why we believe this is something that needs to be scaled more. So first, to attract investment, as we said, to facilitate knowledge exchange, because the MOI beyond the measurement, we like it's enable the management is to understand the level of impact outperformance, but also underperformance, and as partners be able to exchange and disseminate the information. It's accelerate growth for MSME. It enhances accountability, which is much needed. The word of greenwashing was mentioned earlier. This is among one of the key solutions to fight impact washing, greenwashing, all of this washing that we tend to see. And really, it's helped to build impact-driven partnership.
Thank you very much, Ms. Grawi. And I should have mentioned at the start, is the Head of Impact and Sustainability at the African Invest Group. Now, my great pleasure to hand over to Mr. Saurav Chatterjee, who is Chief Executive of Care Ratings. All yours, Mr. Chatterjee.
Thank you. Good morning and good afternoon to all. Bonjour. Thanks to the Financial Services Commission and all the organizations of this event for organizing this and inviting me. Just before we start about Care Ratings Africa, we are a licensed rating agency, the first one from Mauritius. licensed by FSCA and recognized by Bank of Mauritius, having presence in Kenya, and also setting up a subsidiary in South Africa where we have a license from FSCA. Moving on, our journey in Mauritius has been tremendous. Next slide, where we have rated almost $3 billion debt, equivalent to 150 billion Mauritian rupee. And we have rated also around $1 billion of debt in the banking loan, which has helped the banks in terms of saving the capital. We have rated a big number of corporates and entities, including some of the green bonds and the green bond loans issuances in Mauritius. Can we move on to the next slide? I think when we come to Mauritius and the ESG framework, I think we need to define and establish a mandatory ESG reporting framework. I know there is a green bond guideline which is there in line with the ICMA's principle, but what we are looking, what we should be there should be establish and mandatory ESG reporting framework, which needs to be aligned with the international standards and regulations that incorporates both the financial risk and the opportunities as well as impacts across the own operations and across the value chain. In fact, this is what we are talking about, the double materiality, which was earlier explained by my earlier presenter. She explained it very well. So this is where the double materiality even is taking up a big time in ESMA in terms of the rules and regulations. Europe in the European continent, with ESMA making changes in these guidelines, I think ESG reporting framework is becoming very relevant, and with double materiality concept in place. This reporting framework also should be industry specific, and it should apply to all local industries as well as proportionate to the companies and the sizes, ensuring a level playing field. And as a starting point for the reporting framework, we should focus on climate, biodiversity, and human rights, that is covering the social aspects also, to tackle the more pressing local rights and align to the Mauritius NDC 2021. Coming to the ESG reporting framework, I think there's still no ESG reporting framework as such. So there should be an endorsement for a third party ESG rating mechanism in line, which is already there in ESMA. With international standards and regulations, and enabling the local companies to meet the ESG expectations of the foreign investors. Because when we impact a lot of time from the investors or the issuers, we hear that where is the ESG rating is something that the investors ask, and the issuers ask that why do we need to go for a ESG rating? And when they want to attract fund, not from Mauritius, but they have to attract fund from the international investors, that's where the ESG rating can play a role. The rating, and then a rating rationale that how the company has geared it up in terms of its ESG, in its materiality assessment, and in terms of its reporting. I think these are some of the key factors. What can help Mauritius attract green funds and international investors? And definitely creating of a database which can collect information at national level to assess the national progress towards the ESG related commitments, including the NDC 2021. So incorporating sustainability impacts, risk, and opportunities in national regulatory framework is now becoming a norm across the world. And I think ESMA is far ahead, but we are seeing also other geographies coming up with ESG, making ESG mandatory when they are talking about ESG reporting. So Mauritius can lead the way while Africa is still catching up on that. And I think Mauritius, with a well-developed ecosystem, a well-developed capital market ecosystem, I think they can lead the way to set the standards in the African region, and thus become a sustainability and ESG hub and referent of the region, attracting investors to reduce the risk. Moving on to the next slide, this is our ESG scoring methodology, where we score on the environment, on the social, and on the governance, and finally adding up to the ESG score. Next slide, we have done an ESG assessment for a real estate player of Mauritius, where we have done their assessment under various parameters on the environment, social, and governance. The report is public in our website. In the first year, when we did the assessment, we came up with certain suggestions and improvement which was implemented by the company, and which has led to an improvement in their scoring. And some of the factors which was considered by Ivaco Group was actively monitoring energy and water fuel consumption, designing and implement plant, setting up the map to 100% resilience on conventional energy, proper health and safety, effective governance, and a well-defined code of conduct, whistleblower and anti-corruption and anti-bribery policies. These are some of them, but there are a few more which has been implemented. Moving on to the next, this is the ESG assessment which has been done, and I don't think anybody has done any ESG assessment as such, ESG rating assessment in Mauritius, but I stand to be corrected. On the green financing, I understand that we have rated some of the first leasing company, Sim Finance, when they have done the first green bond under the ICMA's green bond principles. They have themselves developed a framework. My friend, good friend Pradeep is also there. He will be explaining about the bond. But I think when we rated the bond and when we assessed it, what we tried to understand is that whether they are following the ICMA's green bond principle. And even when we have done that, and I speak to a lot of people here, they always keep asking me, is financing hybrid or or electric vehicles, is it really green financing? So that's where I think it is very important for people to understand that the rules and regulations as per ICMA's guideline, even at the climate bond guideline, and even FSC's guideline, which are in tune with ICMA, it says that if we are raising a financing to promote clean air transportation and a movement or to reduce pollution, which is basically is being done when the entity is financing hybrid loans or hybrid vehicles or electric vehicles. That's where it can be classified as green, and it cannot get qualified as a greenwashing. And this has led, as per the framework established, and as per when we compare and when we do that assessment, we see that there has been some saving of green gas emission, and some of the equivalent saving which has happened with the amount in 22-23 is like almost 68,000 gallons of gasoline has been saved, or equivalent to 60,000 gallons of diesel, or equivalent to the amount of coal to be used. And I think another entity which has recently again taken a green loan and which has been assessed by us is La Prudence. So we are seeing increasing interest in the leasing space to go for green financing, whether it's a green bond or a green loan, to reduce the cost of borrowing, to offer cheaper finance, and thus make an impact in the environment. If you can see the later part or that bar chart, where it shows that our transportation sector is almost contributes to the 30% of the CO2 emission. And I think if we can plan over the next next 5 years a transformation towards a green vehicle, that can reduce the CO2 emission, and which can only happen if it can be incentivized. And that incentive can come that if the peoples are being offered cheaper loans, and probably this can be done by the leasing companies if they can access cheaper loans, and that's where the green financing can play a role. Moving on to the next slide. From the leasing financing, we can see that there are enough interest in the renewable energy sector. We have seen the first green bond being done by Envolt to support or to set up renewable energy, solar panels and all. So there is one part which is already being operational, and the other part which is currently under construction, and it's expected to be operational in the next couple of months. And we have seen also other companies which are approaching us and which are discussing us to rate green loans so that their cost of borrowing can go down. So I think Mauritius as a market has already, I think has opened up, and there are a lot of synergies which can be there if the green loans or the green bonds can be promoted, because and then that can be linked with the African continent, because Mauritius as a jurisdiction has a very stable political system, has a very stable law system, and a very strong capital market system. So if the funding is raised, and then we can attract African investors to come in and use the jurisdiction to raise green financing, this can help both Mauritius to grow, and given that Mauritius experience, it can help the other African countries. Just to add in the local context that some of the ESG related risk and targets, I think physical climate events which needs to be reduced, which is impacting Mauritius. The financial impact on the Mauritian economy is like loss of crops due to the drought and heavy rain. In fact, this year we have seen how the scarcity of water has impacted our daily life, including the tourism sector, where there was some embargo in filling up the swimming pools, impacting the tourists coming in to use the pools and all. As per the Stevenson Center, impact from the flood and cyclone in Mauritius cover up to $113 million in terms of direct damage each year. The cyclone which impacted Mauritius in February, there was a significant disruption in tourism in the terms that 2 days there was no operational flight, and which has led to a decline in that particular month almost by 10,000 tourists. If we compare February 2024 and February 2025, there has been a dip of almost 10,000 tourists from that month because of the cyclone impact and everything. Sorry. And then there is the climate change also poses a risk to the fauna and flora, and there are the islands there. And I'll not go into the nitty-gritties. I think people are aware of that. Thank you. Yeah. And then the target for the nationally determined contributions, reduction in the GHG emission by 40%. So I think Mauritius is well set to achieve the renewable energy target. There are a lot of fundings which are available with the banks, which can be used. The private sector can use this to promote setting up of renewable energy, and the bond market or the banking sector can be used. Increase the production and capacity of carbon sinks, and then produce 60% of the local energy demand from the green sources. And the promotion of social justice in Mauritius. I think these are some of the on the context, ESG related context. Thank you.
Thank you very much indeed, Mr. Chatterjee. It's now my pleasure to hand over to Ms. Harshini Orjaya, who's General Manager of ESG Intelligence Solutions.
Thank you. Hello, everyone. It's a real pleasure to be here today. So I come to you from Mauritius, not just as someone who calls this beautiful island home, but also as an ESG and sustainability professional who is actively working on the ground to make sustainability happen in the corporate world. So if we jump directly to I see they've changed the slide to the one that I wanted to go to. So let's start with what we're seeing on the ground. Like many island nations, Mauritius is actually feeling the effects of climate change quite directly. So we can see weather patterns are shifting, rainfall is no longer predictable. Like for instance, just this past March, we have received around 168 millimeter of rainfall, and that's only 57% of the average for the month, which usually sits at 294 millimeter. Now, what I wanted to highlight here is that this isn't an isolated case. It's part of a broader trend of more erratic, more intense weather events, like for instance, we're getting drier dry seasons and wetter wet ones. For a country that relies on agriculture, tourism, and coastal ecosystem, that matters a lot. If we move to the next slide. Okay, so now if we zoom out and look at the global development picture, Mauritius currently ranks 73rd out of 166 countries on the 2024 SDG index with a score of 70.45. Now, that's a decent standing, especially for a small island economy, and it actually reflects consistent progress in areas like poverty, decent work and economic growth, innovation and infrastructure, as well as partnership for the goal. But as we all know, when we're talking about ESG, we're not just talking about identification of our strengths. We're also talking about our gaps. So for Mauritius, there's SDG 12, which is responsible consumption and production. That's one area where we still have room to grow. I'll touch more on that a bit, especially as we talk about waste and circular economy opportunities. So if you go on the next slide, please. So why is Mauritius such an interesting proposition when you view it through an ESG lens? First, there's a very clear national commitment. So even though we contribute only 0.01% to the global GHG emission, we have actually pledged a 40% reduction by 2030. Now, that's not just a number on paper. It's actually part of our Paris Agreement commitments and is already shaping policy and funding priorities across sectors. Next, we are seeing the financial regulatory environment evolve too much. As mentioned by both Bank of Mauritius and FSA representatives, there are several guidelines and requirements that have been released, and there's a lot more work that is being done currently. We also have sectoral opportunities. So these are actually areas that, from my experience, are gaining traction, and rightly so. So renewable energy, as mentioned by Mr. Kaulisov previously, is actually on a sharp upward trajectory with a national target of 60% renewables by 2030. Waste management, that's another area that's gaining momentum, especially with government incentives for recycling, upcycling, and even waste to energy projects. And that actually linked back to our SDG 12. And finally, we have biodiversity and ecotourism. So projects like the Varuna project, which focuses on mangrove restoration, show how actually we are thinking about nature-based solutions, and these are actually becoming investment ready. On top of all that, Mauritius has the advantage of strategic positioning. So we're well placed as gateway to Africa with a solid network of trade agreements, a stable political environment, and a trusted legal framework. And what about from a business perspective? So we've consistently ranked very high for ease of doing business, especially in the financial services sector. Now, we have an ecosystem which is supportive, a reliable infrastructure, and we also have reforms that continue to make it easier to operate, especially for investors who prioritize ESG principles. Just to sum up, the one thing that stands out hearing all my peers is that this is not just about ambition anymore, it's about action. In short, the groundwork is done, the momentum is here, and Mauritius is a place where that's already happening. Over to you, Hugh. Thank you.
Thank you very much indeed, Ms. Ojea. Now my great pleasure to hand over to Mr. Pradeep Rawat, Head of Treasury at CIM Financial Services.
Good afternoon and good morning, everyone. So the first slide. CIM Financial Services Limited is a company listed on the stock exchange of Mauritius. We operate across two major clusters, namely the finance cluster and investment cluster. We are licensed by the Financial Services Commission to provide credit finance, factoring, leasing facilities. And we also licensed as an insurance agent by the FSC. We are licensed by the Bank of Mauritius under the NPS, National Payment System, to operate our card and other electronic payment transactions. So, as mentioned earlier by my peers, Mr. Saurabh Chatterjee and even other people at the FSC, we were the first issuer of green bonds in Mauritius back in 2022, when the FSC developed guidelines on the green bond issuance in Mauritius. These guidelines basically align with the International Capital Market Association ICMA Green Bond Principle. One of the first steps was to prepare a green bond framework which aligned with the FSC guidelines and the ICMA Green Bond Principles. So that framework was developed, and we have uploaded that framework in our website so that other peers and issuers locally or internationally can refer to while developing their own framework. In that framework, you will see, in fact, we have identified 5 eligible green asset categories, which are renewable energy, energy efficiency, sustainable transportation, green buildings, and sustainable agriculture. The use of proceeds of the green bond are geared towards the following SDGs. So SDG 7, 9, and 11. In 2022, we raised the first bond of 500 million Mauritian rupee, and out of which we managed to disburse successfully an amount of 342 million towards those green assets, which were mainly green vehicles in 2022. Again, we came back again in 2023 when we issued an additional bond. This time it was a bigger amount, 1.5 billion rupees, and this was disbursed towards financing electric vehicles, plug-in hybrid and hybrid vehicles, and one renewable technological asset. Next slide, please. So we also listed the bond that we issued in 2023. We was the first, in fact, it was the first instrument to be listed on the Mauritian Stock Exchange. So out of the 1.5 billion rupees of bonds that were raised, an amount of 1.1 billion rupees were listed on the Stock Exchange of Mauritius. We have just finalized our Green Bond Progress Report for 2024, and high-level numbers are we have managed to disburse 673 million rupees towards the financing of green vehicles and some technological products. So over the years, what we have witnessed is that after developing our green bond framework, we could find investors who are ready, who are keen to invest in our green bonds. And over the years, we have increased the size of our issuances that we have made. In the table below, like you will see, in terms of the first chart, okay, the amount that was disbursed in 2022, 2023, and the pie chart shows as of December 23 the percentage in terms of what was actually financed of vehicles. Like we see, a big chunk of the financing were made towards the financing of hybrid vehicles. On the right-hand side of the table, which is quite an important table to show, if I recall in the discussions that we have had currently, what are these financing allowing us to achieve? So like we can see, by shifting the behavioral pattern, the consumption pattern of our customers, okay, we have been able to sell assets, sell vehicles which are more eco-friendly, and the results can be summarized, can be seen in the table, like how much of CO2 emission that we have been able to reduce by shifting from petrol and diesel run vehicles towards electric and more eco-friendly vehicles. It's good for me also to add the fact that we have developed what we call a carbon calculator, whereby we are able to compute how much of CO2 savings we are making on every eco-friendly vehicles that we are financing. We have been getting the help from a local consultant, environmental expert who has helped us, who has assisted over the years to build that carbon calculator. And on a yearly basis, what we do, we also give training to all those staff who are directly or indirectly involved with the leasing activity, so that these people as well, they know what we are trying to do and what's changing on a day-to-day locally and internationally. So it's not only about financing green leases, but also it's a whole, I would say, change, education and change in the mindset. And this is what we have been trying to do since 2022. Next slide, please. So in this slide, good for me to highlight some key points that we have recently established an ESG committee at the level of the company, which ultimately is a subcommittee of one of our main committees. And the committee basically it enables us to integrate pertinent ESG, I would say, consideration into our day-to-day business operation, even in our strategic decision. And we have also recently come up with a ESG implementation roadmap, which has been approved by our board. And the idea is to identify, to make a gap analysis, and basically, and also, like I recall earlier, it was mentioned that we need to ensure we are aligned, and we are aligned with IFRS 1, S1 and S2. So to assist us over this journey, we have recently appointed a consultant who will be assisting us during the ESG implementation roadmap that we have approved at the level of the board. If I may add more, we have recently been embarked on a LEED certification of our building where we are currently operating, and this is currently in progress, and we are very much confident that this will be completed very soon. So these are the main points that I wanted to highlight in the 5 minutes that I was allocated. So thank you for your attention. Thank you, Hugh.
Thank you very much indeed, Mr. Roa. And now my very great pleasure to hand over to Mr. Deva Marianan, Managing Director of Sapphire Capital Partners. Mr. Marianan.
Thank you, Hugh. It's always difficult to be the last speaker because I know you guys had a lot of content. So I'm gonna try to rush this through and try to be as practical as possible without going too much for the slides. Sapphire Capital, I'm the founder of the business. We employ close to 100 people here. We're one of the few investment banking institutions in Mauritius, and one of our key assets, which I think would interest this committee and this forum, is building the second largest healthcare group in Mauritius called Artemis. We entered that journey 4 years ago, while SIM was the first one to issue its first green bond in Mauritius. We were the second one, actually, to do that, fully subscribed by one of the largest retail banks here. Effectively, we are the first one in Mauritius which issued a green bond in the healthcare space. Now, in the 2 or 3 minutes that I've got, I'll show you how we get a hospital to become green. But for the sake of this forum, it is very important to know that that green bond at this stage did not necessarily have financial benefits to us now in the short term, but because we didn't really get competitive cost of finance that green financing would give us. But how we see it is mainly a long-term approach, because by having a green instrument linked to green activities of a hospital group, we see value creation over a long term. Aisha spoke about healthcare assets for Africa Invest. From our side, we see ourselves bringing value to that kind of asset class. We are building slowly and surely the largest healthcare group in the country, and looking to making Mauritius a proper medical tourism place. Okay. Yeah. So how we see it: value creation, access to future finance and competitive cost. Hopefully, we'll get that impact, which will be very tangible. When we talk about green bonds, I think it's very important. Bank of Mauritius spoke about framework. Having legal frameworks with the FSC and Bank of Mauritius is very, very important. But as an investment bank at Sapphire Capital, bonds are very specialized instruments. So we feel our industry has to work together to make sure that we are able to attract those kind of instruments in the country. Having access to green financing, green loans, I think we're starting to see the trend where our banks are getting access to finance, meeting the green requirements, that are accessible to them through credit lines. But green bonds are very specialized in the sense that if you don't create liquidity within the market, it's actually very difficult for us to launch bonds, I say. So we need all the industry players to work together to make sure that from an instrument perspective, let alone green, but bonds are actually instruments that we can really look at in terms of capital market strategy of Mauritius for Africa. So what is this bond about? One of our assets being healthcare, being Artemis. We looked and we issued 650 million rupees, our first bond, which was fully subscribed by a bank, one player. So there's no liquidity there, and there was no need for liquidity for that player. But effectively, what happened is, from a market perspective, we had one of the largest insurance groups in Africa, which underwrote that bond, a group called Sanlam Group, and which guaranteed the bank, because our hospital was busy being built and developed. So on the back of a green bond, green finance structure, we wanted to make sure as a hospital group that we build a hospital not necessarily from a building perspective in terms of property in a green manner, but also from an operational perspective to make sure that the hospital is operating as much as possible to reduce those carbon emissions. So when you talk about healthcare groups, one of the key things I want to share is how do we assess, practically the pillars around green frameworks. So building is one, energy management is second. When you talk about hospital, waste management is key. Green procurement, because the hospital procures massively on a weekly basis, is very important. Carbon footprint, I'm going to talk to you about that quickly. And obviously, when you talk about patients, when you talk about doctors, water management is key. So this is how we put that framework together. Similar to Sim, who are obviously from a Sim finance perspective, finance vehicles. Our business is all about helping patients, how about treating patients, about getting doctors on the line and making sure we blend the two. So may I give you some key examples? For example, for energy, for example, we looked at energy conservation. We looked at occupancy sensors. We look at using thermostatic mixing valve for better control of temperature. When you talk about waste management, medical waste management is key here. We needed to segregate biomedical waste and general waste from each other. We needed to reduce the waste that we send to the incinerator on a daily basis. We needed to implement a proper biomedical waste management plan. So it's never been done in Mauritius from a healthcare perspective. We looked at this, we put a framework together, and we said to ourselves, from an international perspective, how would one look at it when we talk about green bond, green finance for a green hospital? So from the procurement side, for example, use of safer hand hygiene and move away from harmful chemicals is key. Microfiber mops and cleaning cloths, very important. Automatic scrubbing machines that use only water, very important as well. So there's a number of rating criterias that one would look at when we look at green hospital operations. And we, as a group, similar to what SIM has done, we put together a green framework, we've put together a green committee, and we assess these criteria on a monthly basis. And we have an independent auditor that score ourselves really on a twice yearly basis to make sure that we're meeting the standards. So this is a long-term approach. And for us, very important that we do not, very important to entertain any kind of greenwashing whatsoever. So that's why we put ourselves to that standard. So I wanted to share that experience with you. We're hoping to issue many more instruments of these kinds, whether in the healthcare or not, from an investment bank perspective for Sapphire. Our second hospital, which we're building, we've committed close to now $53 million already committed. We've got all the big boys with us, the Absas of this world, the Sanlams, the Frasers. We've partnered with one of the largest land banks in Mauritius, the group called Medine. And this building will definitely be LEED certified. So strong believer from our side of green financing in Mauritius, but we need all the industry together to make it work. We're not perfect. We need the regulator, plus we need the industry practitioners. And that's why I was very impressed to hear from AfriInvest as well. We need to be able to sit down together and say, how do we match and blend the financing with what we're doing on the ground? Thank you.
Thank you very much, Mr. Marianne. And thank you very much to all our presenters. What a fantastic run round from the regulator, the supervisor, market practitioners. I hope that everyone got a really strong sense of the ESG investment market in Mauritius and the activities of the players and the regulators therein. Well, sadly, we are not going to have time to take audience questions as we're a little bit over our time. But handling those questions will be dealt with through our host, the Financial Services Commission. But it just falls on me to thank all our presenters once again, to thank the audience for attending, to highlight to you some upcoming events for the FS Club on the 21st of May, 28th of May and 5th of June, and to wish all an outstanding rest of the day, afternoon, evening, wherever you may be in the world. Thank you so much all for attending. Goodbye for now.
Thank you very much.
Thank you very much, Luke. Thank you.
Bye. Bye. Thank you.
Bye-bye. Bye.